Right now. Right now. I just turned it on. Welcome to the big show. This is Investing with Confidence. I am your host, Joshua David, and we are happy to have you with us today. As always, I do have my good friend and my great pal. He is back in his blue shirt, Mr. Blue Man Group, Al Connickson.
And I do not have the blues. I'm actually feeling pretty good, especially with the weather the way it is. This is a reprieve from that. It was really kind of an insulting weather that we had here the last few days.
Yeah, sounds like more coming up again, but it's always great to be back helping our listeners make better investing decisions. An online trading academy, the sponsor of Investing with Confidence, has been teaching people just like you for over 24 years how to use the market for income potential. Now, we're located locally here in Bloomington, right by the Mall of America. Now, that could be used during your income years, your working years, I should say, or during retirement. And Al, we had a phenomenal week in these markets again this week. Just a quick recap on the financial markets. The S&Ps were up about 0.4% on the week, all-time highs again. We should get a clap button for that. The NASDAQ was up about 1.5%, well, actually 1.6%, near all-time highs.
right.
Not quite there yet, but the Dow Jones actually was down about 0.8%. And I believe the U.S. dollar had a pretty big spike at the end of the week this week, and that could be impacting the stock markets moving forward. We've been talking a lot about oil. That surpassed the $70 per barrel mark, roughly ending the week at $70.79. Gold, silver, kind of a boring week, down a little bit. But Bitcoin, that thing they've been talking about for several months now, actually the past year, it's been the hot topic, has been consolidating there right around the 30,000 area up to about 40,000 area. So who knows what's going to happen with Bitcoin. Same with Ethereum. That's also consolidating currently, since it's a 24/7 market, sitting at about 24.25. We have a lot of great moves in the markets, and a lot of people are looking at the market to potentially upgrade their lifestyle. So what do you do with Online Trading Academy and helping them potentially get there, but do that with confidence?
Well, this was an interesting week. You threw out a lot of figures there, but we had what normally would have caused the market to probably react in a different way. On Thursday, the S&P 500 hit another high, and that was the same day that the CPI came out with a jump of 5%. It's the fastest growth pace since the summer of 2008. Typically, that's bad news. So why did the S&P 500 go up? Well, bond yields went down, inflation went up. There's all sorts of things out there that people are trying to figure out. And what's happening is that people are getting back to kind of the old way of doing things, which is coming up with opinions on how they think the market should function. And we say this almost ad nauseum. You can't go based on what your opinion is because the market doesn't care. Your opinion may be wrong. Why not just react based on fact, based on what the market is showing us? That's the bottom line. Always just pay attention to the market. And what we find, Josh, is that most people are still relying on misconceptions and old strategies that are based on outmoded thinking about how the financial markets work, how you can take advantage of them. And for the most part, the public is listening to advice from people that just might not have their best interests at heart. But what we want to do, and what we do at the Online Trading Academy, is work on changing your mindset, change the way you think about investing, and think about it in a way that gives you the same opportunities and advantages as the smart money, as the pros, the Wall Street, big banks. And the bottom line is that you can do the same thing they're doing. And they're just not teaching you how to do it because oftentimes, always they need to have somebody on the opposite side of a trade from them. Typically, that's the public because the big banks control the majority of the trades out there.
You're right. That's a great thought, too. I mean, that's really the fact of the matter is having that proper mindset. Most people are getting advice from somebody that has their best interest, not their clients. If you think about that, there's a reason why Wall Street is so big. There's a street named after it, right? So, Al, there's a lot of listeners that probably have 401ks, IRAs, maybe they have trading accounts, but they want to have the potential to do better, right? I mean, that's what I'm guessing that they're striving for.
Sure.
And you teach investing classes to help people get started in these markets, but to do that with confidence. So it's the beginning of the show, and I want to give away some tickets to this investing class that actually Al teaches right here in Bloomington. Talks about some of the different topics in there, like managing risk and navigating these markets. Some of those mistakes that novice investors make, but how to minimize them. But the key one, I think, is having the proper mindset and having a plan for better investing decisions. So callers 1 through 10, when you call in right now, you're going to receive 2 tickets to come see Al talk about the financial markets, the stock market, plus the other markets that we're going to talk about coming up here next. So callers 1 through 10, 1 for you and 1 for a friend. The number is 952-814-4410. That's 952-814-4410. Al, we got a big show coming up. What do you have coming up next?
Well, 2 things. Number one, I want to continue talking a little bit about what we do, how we help our students. And then secondly, especially as men, we often don't talk about our emotions.
Ooh.
So I want to talk about our emotions.
Well, that's an interesting topic coming up next. Emotions in trading and investing. 952-814-4410. This is Josh and Al, investing with confidence. We will be right back. All right. Segment 1 in the dust.
It is in the can.
So we'll answer some questions here on the YouTube stream here. Looks like we have a question here from, looks like Luke. When the market goes through a correction, which am I worried about? What are my options? A correction is going to happen at some point, Luke says.
Yeah,
So-
and he's right.
Yeah, go ahead and answer that, Al.
Well, yeah, and that's a very smart thing to think about, Luke, because the market will go through corrections. It always has. It always will. What are your options? And that's kind of gets back to what I was saying about the mindset, being able to do what the big banks are doing. They do not lose money when the market goes down. They're not sitting on the sidelines. So and it's interesting you use the word options. What are my options? Options are one asset that you can use where you can benefit in a down market. You have the opportunity to benefit when the market is correcting. You can use assets such as the futures market, the Forex market. You can short stock. You can use what we call inverse exchange traded funds, inverse ETFs. These are all things that I talk about and that Kevin talks about in these classes that Josh is talking about.
It's a lot of talking.
2-hour class, right? But we go over all of these things and answer your specific questions during those classes. Great question, Luke.
Thanks, Luke. Keep them on coming. We'll be back in about a minute or so. One, two, three, four. So we're going to talk about emotions, huh?
Yeah, we're going to talk about emotions.
20 seconds. Looks like we got another question from Luke. Luke, we'll try to get that at the end of the next segment here. Welcome back to Investing with Confidence. I am your host, Joshua David, and having a great day. It's a cool day today.
Yeah, it's strange to say that when it's in the 80s, but
the markets are hot.
compared to the markets are always hot. There's always something in that market or in the markets that we can take advantage of.
If you happen to miss 2 tickets for the investing class, call 952-814-4410. If you're online, you can go to otamin.com. That's OTAMINN.com. If you're just tuning in, Al was shedding some light about having the proper mindset in your trading and investment decisions, how to do that with a plan, but sometimes not always taking advice from the people that are managing that. They have a motive. They have their best interest. We always say it's most important to have your best interest. So Al, as we get into this next topic, a little different topic. I'm sure you're going to shed some light on this one, but you want to talk about emotions in trading and investing. So, what the heck are you talking about?
Yeah, well, before I go into that, let's leave that as a little bit of a cliffhanger there. Let me talk just a little bit more because you asked me in the first section what we do to help our students. In these free classes, we kind of go over that. We talk about what we do differently and why we do that. And it's for a lot of people, they think they know how the markets function, but when they get through going through these classes, they realize that they really didn't. And what we do really is condense things down to two basic objectives. We want to keep this as simple as possible. Most people overcomplicate it and oftentimes stay away from the market because they think it's too complicated. So we keep it very simple. Number one, we want to help you understand and know why and when price changes. And number two, how far it will go. In other words, from the point that it turns or changes direction or starts moving to where it stops doing that and goes the other direction, that's your profit potential. That's how far something will go. And how we do that is by using a proprietary investment strategy called core strategy, which shows you how to identify where institutional unfilled orders are. What do I mean by that? Well, those are orders that the institution is going to place at some time in the future. And when they do that, that's going to cause a movement in the price of something, whether it's moving it up when they buy or moving it down when they sell. The core strategy is designed to help you with a high degree of accuracy identify those buy zones and sell zones before they happen. And that really is the key. I mean, if you think about it, what do you want to have happen when you enter a trade?
You want it to go green.
You want it to go green, and that may be going up if you're buying, it may be going down when you sell. But you have to know the proper price to get into and out of something to be able to do that. That's what the core strategy does.
Yeah, and just to go, add a little more to that, we're understanding where the institutions are doing that because the big money is what moves the market. So you want a strategy like a core strategy that's designed to follow those footprints or that big money and then trade like them. So you were talking about the emotions. How do you eliminate those emotions, or what were you alluding to in emotions?
Well, here's what I was getting at. I'm not going to ask you to talk to me about your emotions.
Oh,
You don't have
thank
to
you.
emote
I'm not very good at
on the
that.
show. I know you're not. It's not your thing. But at the same time that we typically don't talk about emotions, we do let them sabotage our trading and investing. We actually are our own worst enemies. We defeat ourselves. And that's the fear and greed that we're born with. As human beings, you can't help that. That's part of what's inherent in us as human beings. Fear and greed, and I guess the reason is that in our everyday life, those are things that will help us and in some cases save us. For example, if I'm out in the woods and I see a hungry grizzly running at me, I'm all of a sudden going to realize I can run much faster than I thought I could because of that fear. That's fear-induced fast running. But be honest with you, the only thing I really need to do is make sure that I'm with somebody that's slower than me.
Are you talking about me?
I'm in good shape. You're invited to go with me anytime I go out in the woods. But the bottom line is that it's those emotions that get involved in your trading and investing that will have you making the wrong choices. Finances are emotional enough as it is, so you don't want to add your emotions to it. So that sounds like an easy thing, but, well, it really isn't an easy thing at all. How do you control something that's part of you as a person? Well, you have to do something different. And to really control those emotions, you have to take the thinking, the fear, the greed, the thinking, the gut decisions out of your trading and investing. You do that by following something that's really methodical. For every trade, every investment that you're doing, just follow a set of rules, a step-by-step process that requires you to not think about it because everything is right there. It's very easy. It's very simple, but it takes that fear and greed component out of your trades.
Yeah, and that's kind of what moves the market too, is buyers and sellers, which is fear and greed. If you think something's really good, you're going to have some greed. If you think something's bad, you're going to have some fear. But it's most important to have rules, as Al is talking about, within a plan, and having a plan to execute your trades. And as people are When you understand how to trade and invest properly with a plan, you place your trades on a platform. The platform actually executes it for you.
Right.
So that will actually help you eliminate those emotions as well, because you actually don't have to be at your computer when it executes it. It does it automatically for you.
Yeah. In fact, you're better off not being there.
You're right. And
Yeah.
you kind of dissect that a little bit in these investing classes that you teach here in Bloomington, Al, about how to potentially place your trades, let the computer do the work for you, how to have a plan and rules within that plan to eliminate any emotions. So, callers 1 through 10, I want to invite you to an investing class right here in Bloomington. They're only 2 hours in the mornings. We usually typically do those during the week. We also have those on the weekends, so pretty much anybody can attend. So, callers 1 through 10, when you call in right now, you're going to receive 2 tickets for the investing class. I'm also going to give away the Financial Quick Start Kit. When you call in now, make sure to mention the Financial Quick Start Kit. You'll receive that when you attend. That'll help you get started right away. 952-814-4410. That's 952-814-4410. So, Al, we talked about the emotions of trading and investing. You need a plan, rules within a plan, and then a timing strategy, like a core strategy, like you were talking about earlier. But you also want to trade and invest with the right assets. We have a lot of listeners that want or are striving for income potential, and they're looking at the market to do that. What are some of the techniques and strategies or assets people like to use with the smart money for that potential income?
Well, what you're talking about is a component of a trading plan that everybody should have. And that trading plan is comprised of some very important things. Number one, it is comprised of that core strategy, that foundational strategy that really times the changes in prices. And I'm sure that a lot of you listening have heard you can't time the market. Well, we have a strategy that with a high degree of accuracy does that simply because it follows the people that are moving price. And then secondly, it's controlling those emotions, as I mentioned. That's following a set of rules that are part of that plan. And the third is knowing the proper asset to use for you. It's having the knowledge of how to use an asset that is best suited for you to reach your goals, whether they are short-term for income or long-term investment goals. How do you do that? Well, there's a difference in how you approach the market short-term and long-term. And most of you, unfortunately, are only in a strategy that will benefit on a long-term basis. In other words, look at this as a multi-decade investment. That's pretty much what you've been told by your Wall Street advisors. Short-term means short-term, just like it says. If you have needs, if you have cash needs for something now, whether it's an emergency, whether you just want to take a great trip now that the economy is starting to open up, a lot of people are flying, maybe looking at some cruises. Well, that takes money to do that. Maybe you need some additional money now. You can't buy a ticket for a flight somewhere and tell the airlines you will pay them in 20 or 30 years when your long-term portfolio reaches a point where you start cashing it in. You need that extra money now. So there's a lot of things that people need that extra income for, that extra cash now. Right now, if you're working, if you're not retired, that comes from your job. If the job is not quite enough or providing quite enough for you to cover the things that you want to do now, plus have some additional to cover your retirement years, because that's where the money for your retirement comes from. It's a spillover from your income portion.
Yeah.
But
So what do you think is the right asset for people to trade? Stocks are expensive.
Stocks are expensive. Stocks are a great long-term investment, but we would say that you can also boost the returns of your stock by using some additional assets. But for short-term, then look at some of the assets that institutions are using, Wall Street's using, Warren Buffett uses. They're short-term vehicles. In other words, they have a short life. You get in and you get out in a relatively short period of time. For some people, it may be daily, some people weekly, maybe some people monthly. There are assets like options, the world of options. You can kind of decide what time frame you want to use because options have an expiration date that you choose. The futures market, that's a great short-term trading vehicle. Sometimes for people that are looking at daily or weekly income, that might be the best choice because it is very short-lived. The foreign exchange market, called the Forex market, again, that can be used short-term depending on the time frame chart that you're looking at, or it can be used for your long-term wealth buildup also. I mentioned the word chart. With all of these assets, what we do is teach you how to read a price chart, very similar to how a radiologist would read an X-ray or an MRI, because everything you need to know is in that price chart. And if you're looking at a short-term vehicle like futures, Forex, or options, you can use a shorter-term time frame chart. We show you how to do that. That's not, I don't want to complicate things by saying that because it's very easy to do, but you just have to know how to see what's on those charts.
You're right. I mean, you have to have the proper rules and proper tools to make those decisions. But you want to trade like the smart money. If the smart money, think about it this way: if the smart money is always generating income, the smart money is always winning. The smart money is using other assets, not just stocks. Do you think we want to be like them? And that's what a lot of people are coming into these investing classes. We have a full class here right now today, and learning about these other assets. What opportunities are out there for the average investor? That pretty much the same thing the smart money has. So if you want to learn more about those, Al teaches investing classes, talks about those tools that you might need for better investing decisions. So callers 1 through 10, when you call in right now, I'm going to give away 20 tickets to this investing class right here in Bloomington. They're only 2 hours, so not too much of your time. Callers 1 through 10, one for you and one for a friend. 952-814-4410. Mention the Financial Quick Start Kit. You'll receive that when you attend. 952-814-4410. Al, what's up next?
Well, let's talk about what very well could be the most important asset in your life and why you know very little or anything about it.
Talk about a cliffhanger. The most important asset in your life coming up next. 952-814-4410. This is Josh and Al, Investing with Confidence. We'll be right back. About 2.5 minutes here. So looks like I'll get it. I got it. Yep. Looks like Luke has a question. What about retirement accounts? Why should I look into opening up a Roth IRA 401k? Which is better? So Luke, there's obviously there's multiple retirement accounts. We're going to actually cover some of that in the next segment here on the most important asset. But a lot of that can be contingent on your age as well. If a lot of people that are over 59 and a half and they're able to take cash out of that, they like to use potentially a Roth IRA. And we're not advisors or anything, but that might be an opportunity to use basically because the capital gains that come out are non-taxed.
Yeah, actually, everything that goes into a Roth IRA, the money that goes in that you contribute is already taxed. So you're not going to be taxed on that when you take it out. The great thing about a Roth is that the growth of those assets comes out tax-free. That's huge. That's where the real big number should be, is in the growth. The younger you can start, the earlier you can start doing that, the larger that growth portion will be. It all comes out tax-free. That's a huge advantage. Plus, with a Roth IRA, you don't have to take required minimum distributions. If you want to, let it continue to appreciate and then pass it on to your heirs, you can do that tax-free.
Yeah, it's pretty important there. And actually, Josie has a question about 401ks as well. She has an old one with a previous employer. We'll cover that as well, Josie, coming up. I mean, what do I do with it? She says, since my present job doesn't offer a 401k. So there's multiple opportunities here. And as we're talking about this stuff, you want to be educated on it first. You don't just want to go open it and invest with it without the proper rules and tools. But if you have an old 401k, there's an opportunity you might have to roll that into a self-directed IRA. Right. That way you can manage it yourself, minimize those fees or eliminate those fees because it's sitting there right now, probably at risk. And then if you think about it, what is your best interest, right? So you might want to look into potentially moving that to a self-directed IRA. Like I said, we're not advisors, but that's an option you do have. We'll be back in about a minute or so. Oh, man. Welcome back to Investing with Confidence. My name is Joshua David. And if you're just tuning in, Al was shedding some light about emotions in trading and investing. How to eliminate or minimize those emotions is by having a plan, rules within that plan, but also trading the right assets as well. If you're in your working years and stocks are expensive, there's opportunities with leverage with futures, Forex, and options. If you happen to miss 2 tickets for the investing class, call 952-814-4410. You can also register online by going to otamin.com. That's OTAMINN.com. So, Al, you kind of left a little cliffhanger on the last segment there. You want to get into the most important asset that people have that they know nothing about.
Right.
Now, let's talk about that a little bit, because if people know nothing about the most important asset, I think today is the day to learn about it.
Yeah, and some people know some things about it, and some people know very little to none. What I'm talking about is your retirement savings, your what you call your life savings. It could be your 401k, any kind of an employer-sponsored retirement plan. The two biggest assets in your life are probably going to be your home and your retirement account. People are living longer now, Josh. It used to be when you retired at 65, you were lucky if you lived another 5 years.
Mm-hmm.
That's not the case anymore. People are living 30, sometimes 40 years after they retire.
Yeah, I believe the average lifespan is 82 or 83 years.
Right,
average.
up in the 80s. But what people are saying now is that people that are born now could live into their 120s,
Yeah.
which is going to require a lot more money. But think about it. If your two biggest assets are your house and your retirement savings, compare the two. What do you know about one over the other? What do you know about your house? Well, you probably know what the value of it is. You know what the cost is. You know what your taxes are. You know what it costs to maintain it. You know how to maintain it. There's all sorts of things you know about your house. But now let's talk about your employer-sponsored retirement plan. What do you know about that?
Crickets.
And that kind of gets down to Josie's question, too. She said she had a 401k with her previous employer. New one doesn't have a 401k. She has the ability. That is her money. Anytime you leave a job, you can roll your 401k or 403b money into a self-directed IRA. It doesn't have to be into another 401k, and it doesn't have to be left in your old employer's 401k plan. And here's the problem. 401ks are great to get people started, to get you started saving, because it kind of forces you. You get used to having a certain amount of money taken out of your paycheck every week, and after a while, you kind of forget about that. Problem is, you also forget about where it's going and what it's doing for you. You're sold an idea here that this is a great retirement investment for you. All you need to do is have this 401k set up, agree to do it, have some money taken out. It's going to be put into your retirement when you retire. Because the money is managed by a professional, everything is going to be great, and you are going to live the life of Riley. Well, the problem is that those managed accounts, 90% of them underperform what they're supposed to perform with. Also, there's a big sucking sound in your 401ks, and that's like somebody took a vacuum cleaner to your account and sucking dollars out. That's fees that you pay, fees that could cost you 40 to 60% of what you could have when you retire. That's huge.
So, Al, what do you do to help people eliminate the fees or help people get started to move it? I mean, we're told just to let it sit, right?
Right. Well, that is exactly what's happening.
So, how do you help them?
And one of the great things about a 401k is a match. If your employer is matching a portion of what you put in, that's free money that you should take advantage of. But then understand that the choices that you have available to you are mediocre, probably at best. You've got fees associated with them. What we help you do is identify, number one, what's in those portfolios. What do you have available that might be better than what you're using? And also, did you know you can trade within those accounts? You have the option, the opportunity to move from one asset to another within those accounts. You may be in an asset right now that is underperforming or is getting ready to underperform. And how do you identify that? Well, you use that same chart that I was talking about. You use that same core strategy to identify where buyers and sellers are for that type of a mutual fund, if you're in a mutual fund or ETF or stock. And maybe you look at moving into something different. It's what we call dynamic 401k management. But what we also talk to people about is how they can take that money that's in your retirement accounts when you retire, when you leave a company, and put it into something that gives you many more choices, has no fees, and gives you the opportunity to participate in a correction in a downward market. And that's a self-directed IRA.
Yeah, and those are the important things to just understand what are your options. And there's a lot of people that we talk to that have those old 401ks or even have a IRA or something with an advisor, and they feel or they're told, you're not supposed to know anything about that. You're told leave it with them, trust
Right.
your advisor, right? Well, who do you think has your best interest with your money? Hence the word your money. You probably will. So, if you want to be able to learn, how to do that, I mean, you may want to talk to your HR with the old employer or the company sponsor to see what are your options. How do you minimize those fees that are in there? And we've helped a lot of people. I know you've helped a lot of people do that here at Online Trading Academy as far as what are the proper steps to potentially take over your retirement account or your life savings and protect that, right? There's different techniques and strategies that you've helped people do. And if you need to learn how to do that, Al helps people do that. And it starts in these investing classes. Actually, there's a whole topic on 401ks, IRAs. What are your options in those? How do you potentially move them? So callers 1 through 10, I want to invite you to this investing class that he teaches right here in Bloomington. They're only 2 hours. We do these during the week and also on the weekend. So if you want to learn more about those 401ks and IRAs, call in right now. When you call in right now, you're also going to receive the retirement planner. There's some topics in there that could help you get started right away. Call 952-814-4410. That's 952-814-4410. So, Al, you mentioned self-directing.
Mm-hmm.
Self-directing IRAs. And, by doing that, people want more confidence doing that. You've helped a lot of people do that. What do you think is some of the main, some of the first steps to take to do that, but to be able to do that with more confidence?
Well, again, this is your money, and it's money. It's an account, a life savings account, so to speak, that you're going to rely on when you retire. There's a couple of things to remember. When you're working, you have these things coming in on a regular basis called bills.
Mm-hmm.
It's the cost of being alive. When you retire, those bills continue to come in. Sometimes they are larger, especially the medical part of it. But when you're working, those bills are covered by the income from your job. When you retire, what happens to that income?
You're unemployed now.
That income is gone. You're unemployed. So part of what we teach our students is how to, let me kind of rephrase this. What we think is more important is not the amount of money you have in a retirement account, but what you can do with it, what you can generate off of it to kind of help to cover some of the cost of being alive.
Yeah, you know what's crazy? There's a lot of plans people that are being put into bonds. I mean, they say that's a safe strategy. What is bonds going to get you right now? Basically nothing.
That's a good point. I mentioned earlier that the yield on the bonds is going down. The 10-year is under 1.5%, 1.45%, I believe. What a lot of people used to use, Josh, for short-term income, and we talked about that, that last segment. What a lot of people used to use was a 90-day Treasury bill. And back in the year 2006, those 90 days, the income from that would be about $1,250. And that's not that bad. But now the returns have gone down over almost 98%. So that 3-month, that 90-day Treasury now is going to get you $25. What can you buy with that? How is that going to help you with?
Inflation. You can't buy hardly anything right now.
No,
cost of food is going up. Everything.
You can feed a family of 3 or 4 at a McDonald's drive-through maybe for that, but then
I
that's
think we
it.
talked about my last McDonald's drive-through was about $18 for me.
Yeah, well, you order one of everything on the menu, Josh.
That's right.
But the important thing is to know that there's a place that you can put your money, put the hard work, the money that you've worked so hard for into that will give you the opportunity to have many more choices, the ability to participate potentially beneficially in a down market or even a sideways market. We mentioned leverage. We didn't really go into that, but there are assets, the futures market, the foreign exchange market, the options market that trade with leverage. So every dollar that you put into something could allow you to participate in something that's 10 to 100 times larger than that amount.
Yeah, and I think that's a great point, using the leverage properly. I mean, there's probably a lot of people listening that may only have 50 grand, 100 grand, maybe 200 grand in their retirement account.
Sure.
And they understand, okay, that's not going to be enough. What can I do now to potentially get to that promised land, which is retirement. They don't want to be spending those years at the golden arches. That's the golden years of their life. But it's all about using that capital during retirement. We talked about earlier, I mean, people are being put in bonds. That's not really getting a return for people. What are the opportunities that you may have? I mean, it's all about having income potential during that retirement years and having the right asset, using the proper leverage safely. Doing that without emotions is key, and Al gets into that in these investing classes. How do you potentially use the market for income in retirement? How do you use the leverage properly? What are the proper leverage assets with a 401k or an IRA? But to do that, you got to start now, because now is the time to do that, not later. Callers 1 through 10, I want to give away 20 tickets for this investing class that he teaches here in Bloomington. They're only 2 hours. We do these during the week, also on the weekend. And these are classes where we've taught thousands, just like you, our core strategy, which is designed to teach you to make better investing decisions. Callers 1 through 10, one for you and one for a friend. The number is 952-814-4410. That's 952-814-4410. If you're online, you can go to otamin.com. That's otaminn.com. Al, we got the home stretch coming up. Let's hear it. What's coming up next?
Well, we need to talk a little bit more about retirement because it is such a significant part of people's life. But also, I want to talk a little bit about women.
Ooh, sounds interesting. Coming up next, more retirement, but also the ladies. 952-814-4410 for 2 tickets for the investing class. We'll be right back. And we'll be back in a minute and a half. Did you say 25? Okay. Yeah, just looking at the 10-year yield, as Al was talking about, it's at about 1.45% right now, which is lower than inflation. So you're basically losing money. You're purchasing power to inflation.
Well, sure. With inflation over 2%, you do the math. It's not very attractive.
Well, you're even seeing everything. The cost of food has been going up. Building a home. I mean, you buy lumber right now. That's skyrocketed. We have Cargill here. I mean, any cereal that you're having has gone up.
Sure.
And those prices are just skyrocketing.
All of the commodities have just gone crazy. The Fed is saying that inflation is transitory in the second half of the year. It should be better, but a lot of people are questioning that now. And if they're wrong, that's going to have a huge impact on what they're going to do with interest rates and how that will impact the markets.
Yeah, and oil is back to prices where it was back in 2018. So I mean, that's up. I mean, I could probably just check here. In the last we're back. Welcome back to the final segment of Investing with Confidence. I am your host, Joshua David. We are always having good talking about retirement plans, 401ks, IRAs, but potentially using those yourself rather than having somebody else dictate your future. Think about that. If someone else is dictating your future, how are you going to implement your goals? If you happen to miss 2 tickets for the investing class, call 952-814-4410. You can also register online by going to otamin.com. That's otaminn.com. So, Al, let's continue this discussion about retirement, 401ks. When we talk about retirement, that's your life savings, right? Your 401ks, your IRAs, 403Bs, TSPs, all those company-sponsored plans that are out there. Now, you mentioned that 4-letter word earlier, and no, we don't need a bleeping button. It's that fees. It's fees, right? People are being charged high fees that they don't even know about.
Correct.
Right? So what are some of those fees that do apply to retirement accounts, but how do you minimize them?
Well, most people have, in fact, a lot of people don't even know that they're paying fees in their 401ks.
You're right, yeah.
There is a reason you do not get a separate bill from your plan sponsor for your fees, because it would cause you to go crazy. Let me ask you this: what do you think the fees are in your retirement accounts? Is it 1%? Is it 2%? 4%? 5%? Somewhere in a combination of those or in between. For some of you, you may be paying 4 or 5%. It just at 2% over the course of your lifetime. That's where as much as 50% of your assets can be basically gone. They disappear, and the reason is it's not just money that's taken out of your account every paycheck, but it's the lack of compounding, the lack of growth of that money that's taken out, and that's the real danger comes in.
Just to shed some light on that, Al, in 2021, the market, most people would consider the market doing pretty well, right?
Hmm.
The market's actually up about 12% on the year. If you
Correct.
are if you have a fee of 2, 3, 4, let's just say 5%, that's dropped your return right there. People don't think about inflation. That drops your buying power.
Right.
So you really need the market to outperform all those fees, right?
Yeah, really, what you're looking at is that the average return on most retirement accounts is somewhere between 4 to 6%. That's only if on the periods of time when the market is going up, but
Hmm.
that also exposes you to as much as maybe a 50 or 60% correction. Back in 2000, the year 2000, and the year 2007, 2008, a lot of our students went through those time periods before they became students and lost as much as 50 to 60% of their assets. How would you like that to happen? How would you like to retire and then the year you retire or the year after you retire or the year before you retire have half of what you've worked for just disappear? How long do you think it would be to take you to rebuild that? I mean, would you have to go out and start a new career? Try doing that when you're 70 years old. Uh, so the point is, and here's some of the fees. You would ask that question about fees.
Hmm.
Well, you've got transaction fees, you've got the 12B1 fees, marketing fees, you've got legal fees, administrative fees, soft dollar fees, revenue sharing fees. Do you know what those are? Because you'll never see those. Those are not things that you are exposed to easily. So understand that there are a lot of fees there that you can eliminate if you take control of your assets yourself. If you have a self-directed IRA, for example, some of you can have a self-directed Roth IRA. Some of you a traditional IRA, but you have choices there. In most of your employer-sponsored plans, your choices are mutual funds, maybe some exchange-traded funds, maybe some individual stocks. But think about it. If you own a mutual fund, an exchange-traded fund, or a stock, what has to happen for you to benefit? The value has to go up. The market has to go up. Well, it doesn't always go up. So what happens if the market goes down? What happens if it's sideways? Wouldn't you like to be able to participate beneficially if that happens? If you have a self-directed IRA, you can. Not only do you not pay the fees, but you can use assets that have the potential to appreciate when the market goes down. And by the way, it goes down 3 times faster than it goes up. And you can also use assets that will benefit if the market is sideways. There's some great kind of income producing strategies you can use, primarily with options. But these are the things that we talk about in these classes. And it's interesting that I would say 99% of the people that go through our classes, Josh, come in only knowing about mutual funds and stock, and they think that's what they're going to invest in. By the time they leave, that's not at all on their radar. What they want to learn more about are options, futures, or Forex, or a combination of those.
Yeah, I mean, there's so many different opportunities when you have a self-directed IRA, and that's what people want is more opportunities. And one of those C words, choices.
Mhm.
And there's opportunities to ensure your life savings. If you have X amount of dollars, let's say it's 50 grand, 100 grand, 500,000, let's say a couple million. If you think a market that can go up can go down, it will go down. There's opportunities to protect that.
Yep.
Because now is the time to protect in a good market because you don't want to lose those gains. And if you are one of those people that have a 401k and want to protect what you have, Al talks a lot about protection in 401ks, IRAs, the different opportunities, and potentially using options to protect those. So callers 1 through 10, I want to give away some tickets to an investing class that he teaches right here in Bloomington. When you call in right now, you're going to receive 2 tickets. You're also going to receive the retirement planner. That'll actually help you get started right away. 952-814-4410. You can also register by going to otamin.com. That's OTAMINN.com. So Al, you wanted to mention something about the ladies out there.
Mhm.
What are you talking about?
Well, hey, we're seeing a lot of women come into these classes now, Josh, and for a number of reasons. There are a lot more women that are high level executives that are doing really well financially that want to learn how to do something with that money. There's a lot of them that end up maybe as a single parent. I've got a couple of coming to a class in about a week now that are looking at having their kids learn how to trade and maybe even doing that instead of going to college. And then also there are life events that happen. The truth is, Josh, that women live longer than men,
True.
and a large number of women out there will end up living alone for a period of time, and then having the full responsibility for their financial world. So instead of waiting until it's too late, this is a great time. Learn how to do this now. And husbands out there, this is a great thing for you to do for your wife too, because you may not be around when they have many years left to live in their finances that you have available. If you want them to be able to still benefit from those, this is a great time to learn. And the number one thing, by the way, that all of you need to learn is how to protect your assets. And just I'm pleading with you, please learn how to do that. You do not want to work 40 years working hard, putting money away for retirement, and then having the majority of that money end up in somebody else's account. And if we go through a bear market, that's a 20% or greater drawdown. In the year 2000, we had a 50% drawdown in the S&P. In the year 2007 through March of 2009, 57%. And if you're just using that buy and hold strategy, whether it's in your regular account or in your retirement accounts, this is what would have happened if you had, let's say, $100,000 in the year 2000, and you followed Wall Street's advice, which is holding on during the corrections. You went through two corrections through 2009. Your $100,000 in the year 2009, 9 years later, would be worth $47,000, $43,000. I'm sorry, it's worse. $43,000. It took almost 15 years for you just to get back to where you started in the year 2000. That's something that you don't want to have happen when you go into retirement. So protection is available, especially in those self-directed accounts. The number one thing that we teach our students is how to protect their assets, and not only how to benefit when the market's moving in different directions, but how to also protect your assets, protect your profits, protect your principal.
Yeah, one of the cool things about our sponsor, Online Trading Academy, is they've been around for over 24 years and helping people make it better investing decisions during their working years, but also during their retirement years. But it's all about a community. I mean, a lot of people,
Yes.
that are coming into these investing classes, they're saying, "Hey, I want to get started trading and investing. I have a 401k IRA. I just don't know what to do with it, but I want someone to help me. I want to be involved in a community or a group." And that's why they love Online Trading Academy, because they have those groups, those community events where people can trade and invest and bounce ideas off each other together. And it's all about having more choices, whether you're in your working years or retirement. And so they're with talking about retirement. People want income potential during retirement, and they're searching for something. Some people are searching at the market to do that, and there's opportunities that the markets may have out there that are available to the public. And it's all about understanding how the smart money is doing it and trading and investing like them. So if you want the opportunity for income potential during retirement, let's say you want to learn the techniques and strategies to do that, or the techniques and strategies to protect your capital in a down market or an up market, continuing to build. Markets have three directions. They
Yes,
go up,
they
down,
do.
and sideways. It's having a strategy for any market condition. So, Al, it's getting close to the end of the show, and we have a lot of people that want to get started, don't know where to start, and you help people get started if they're brand new. We see people that are coming to these classes that have been trading. They just want to, do better. So callers 1 through 10, I want to invite you one last time to an investing class that we do right here in Bloomington. Our sponsor, Online Trading Academy, hosts these. They're only 2 hours. We do these during the week, also on the weekend. So callers 1 through 10, when you call in right now, you're going to receive 2 tickets so you can bring your spouse or a friend. You're also going to receive the Financial Quick Start Kit. That will actually help you get started right away. There's a couple topics in there. There's 3 retirement strategies Wall Street does not talk about, but also bond strategies. 952-814-4410. That's 952-814-4410. 4410. Al, hit him up with some good old words of wisdom.
Well, Josh, it's easy to put off thinking about your finances until it becomes a problem. You can put off mowing the yard, you can put off vacuuming the living room because there's no real consequence. Your yard's going to still be there tomorrow, the living room will still be there tomorrow, but it's a different story with your finances. If you ignore them now, they might not be there tomorrow or might not be there, be enough of them for tomorrow. So no matter where you are now, it's not too late. It just might mean doing something different, maybe something that you know nothing or very little about now, but that just might be the answer for you.
I'm glad you mentioned that. It's never too late. If you're 40 or 50, you're at halftime of your life. Now is the time to get started. One last set of tickets to get started in the financial markets, 952-814-4410. Same time, same place next week. Until then, retire young, my friends.